Y'all ready for this? Let's go.
Welcome back to the Ben James Smith podcast. Today we're going to talk about something that is dominating headlines across the UK, the rental crisis. Rents rising, supply tightening, tenants struggling to find homes, and most commentary focuses on the symptoms. But what's far more important, especially from an investment perspective, is understanding the cause. Because the UK rental crisis is not a short-term imbalance, it is a structural shift. And once you understand that, you start to see why this is one of the most important dynamics in the property market today. Part 1. What people think is happening. If you read most headlines, the explanation sounds simple. High interest rates have pushed landlords' costs up, so rents are rising. That's partially true, but it's not the full story. Because if rising costs were the only factor, rents would rise temporarily and then stabilise. What we're seeing instead is sustained upward pressure, which tells us something deeper is happening. Part 2, the real issue, supply is shrinking. At its core, the rental crisis is a supply problem. Over the past few years, several forces have pushed landlords out of the market. Higher mortgage rates, tax changes, reducing profitability, increased regulation and compliance, EPC requirements, general sentiment shifting against landlords. Individually, each of these is manageable, but combined, they change the economics of being a landlord. So what happens? Landlords sell, properties leave the rental market, supply reduces. Part 3, demand has not reduced. While supply has been shrinking, demand has remained strong, and in some cases increased. Why? Because first-time buyers are delayed by affordability constraints. Immigration continues to support population growth. Lifestyle shifts have increased demand for flexibility. Household formation is rising. So we have a simple imbalance. Fewer rental properties, more people needing them, and that imbalance is what drives rents, not just costs. Part 4, why this isn't going away. Here's the key point. This is not a cycle that will naturally correct itself. Because the barriers to increasing supply are still in place, planning constraints remain tight, build costs remain elevated, developers are building less, not more, private landlords are still exiting, so even if interest rates fall, supply does not suddenly return. It takes years to rebuild housing stock, but demand adjusts far more quickly. That's why this is structural, not temporary. Part 5, the institutional shift. This is where things get interesting from a capital perspective. When a market becomes structurally undersupplied, it attracts institutional attention. We are already seeing large investors allocate capital into build-to-rent schemes, single-family housing portfolios, long-term residential income strategies, because they recognise something important. Rental income is becoming more predictable, and predictability is what institutional capital values most. This is not about chasing yield, it's about owning exposure to a structurally supported asset class. Part 6, the social versus investment narrative. There are two ways to look at the rental crisis. From a social perspective, it is clearly a problem. Affordability pressure, limited availability, rising tenant stress. But from an investment perspective, it highlights something else. Structural demand. Markets where demand consistently exceeds supply tend to produce stable income streams. And stable income streams attract long-term capital. So the same dynamic that creates pressure socially creates opportunity economically. Part 7, what this means going forward. Looking ahead, there are only a few ways this imbalance can resolve. Significant increase in supply, unlikely short term. Significant reduction in demand, also unlikely. Or continued upward pressure on rents. Most likely we see a continuation of the current trend. Gradual rental increases, institutional capital entering the space, professionalisation of the rental market, and over time a shift from fragmented individual landlords to more structured, large-scale ownership models. So when we talk about the UK rental crisis, it's important to move beyond headlines. This is not just a reaction to interest rates. It's a reflection of deeper structural imbalances in housing supply and demand. And those imbalances don't correct quickly. They persist. which is why sophisticated investors are paying close attention. Because in property markets, the most valuable opportunities are often found not in short-term movements, but in long-term structural shifts. Thanks for listening, and remember, the strongest property markets aren't those with the highest prices, they're the ones where demand consistently exceeds supply. I'll see you in the next episode.